If you're a landlord here in the UK, there's a big question you should be asking yourself as we get closer to 2026. How likely am I really to face a tax audit? Well, the answer might just shock you. The entire landscape for property owners has changed, and to help us make sense of it all, we're drawing on some brilliant insights from the expert tax advisors at My Tax Accountant.
Right, let's get into it.
So let's kick things off with a pretty jaw-dropping number, £107 million. Now, that is not a lottery win. Nope. That's the amount of unpaid tax HMRC managed to get back from landlords in just a single year. So where on earth does a number like that come from? Well, it's the record-breaking result of something called HMRC's Let Property campaign. And you need to know, this isn't just business as usual. It's a massive signal that the tax office is getting incredibly good at finding unpaid tax from landlords. Honestly, you should think of it as a huge warning shot for anyone who isn't 100% on top of their tax affairs. Which, of course, brings us to the most important question of all. As we look ahead to 2026, with all these new changes coming thick and fast, the odds are really starting to stack up. The risk of an audit, well, it's not some distant thing that happens to a few unlucky people anymore. It's becoming a very real possibility for a lot of us. So you've got to ask yourself, could you be next? So why is the risk suddenly so much higher? Well, it all starts with the technology that HMRC is using now. You know, they've basically got this super effective digital detective on the case, and believe me, it is an absolute game changer. At the very heart of all this is a system called Connect. The best way to think about it is as a super smart AI that's constantly digging through, get this, 22 times billion different pieces of data. And its only job? To connect the dots, spot the patterns, and flag up any little inconsistencies between the life you appear to be living and the income you're actually declaring on your tax return. It's designed to find the gaps. And would you just look at the reach this system has? I mean, it goes incredibly deep. It's not just glancing at your tax return anymore. Oh no, it's scanning your bank accounts, looking for that rental income. It sees your mortgage applications. It knows every time you buy or sell a property from land registry records. It sees your listings on Airbnb and Booking.com. It even looks at your tenancy deposit schemes. It can even see what you're posting on social media and what you're selling online. And it's not just in the UK. This thing pulls in data from over 100 other countries. Your entire financial life is basically an open book to HMRC now. And hey, don't just take it from me. The legal experts at Pinsent Masons put it perfectly. They said the algorithms behind Connect can spot things that a human investigator, no matter how good they are, would almost certainly miss. We're talking subtle patterns, hidden links between people and properties. It sees everything. The days of trying to fly under the radar? They are well and truly gone. So, you've got this incredibly powerful AI watching everything. But that's not all. Not by a long shot. The second huge change is a complete revolution in how you report your taxes. It's called Making Tax Digital, or MTD for short. Okay, so you really need to get your head around just how different this is. For years, tax has been like a big once-a-year exam, right? You'd spend ages gathering your records, you'd file one massive return by the 31st of January, and then you'd breathe a sigh of relief. Well, MTD rips that all up. It's less like that one final exam and more like having your homework checked by the teacher every single week. You're going from one annual deadline to 5 deadlines a year. That's 4 quarterly updates and one final end-of-year declaration, all done digitally. Now, you'll definitely want to hear this part because it's coming up fast. From April 6th, 2026, if your gross income from your properties and any self-employment is more than £50,000, you're in. A year later, that threshold drops to just £30,000. Now, this is the bit that catches so many people out. The key word is gross. That's your total rent before you take off a single penny for expenses like your mortgage interest or repairs or agent fees. So a landlord with just a couple of properties could easily go over that £50,000 threshold, even if their actual profit is much, much lower. Let's just quickly run through what this new routine looks like. So first, every 3 months, you'll send a quick summary of your income and expenses using approved software. Simple enough. Then, at the end of the year, you submit something called an end-of-period statement to lock in your property business figures. And finally, you do your final declaration, which is basically your new digital tax return, pulling everything together. It's a constant year-round thing. And here's a really crucial did you know for you. These new rules come with new penalties. Of course they do. HMRC is bringing in a new points-based system. For every single submission you miss, you get a point. As soon as you hit 4 points,
bang, a £200 fine is automatically triggered. It's a system designed to hit repeat offenders much harder than the old one. So, staying on top of those quarterly deadlines, it's absolutely non-negotiable.
Right, so we've got the AI detective and the MTD revolution. But it does not stop there. You see, these changes aren't just happening on their own. They're all part of a much bigger, coordinated plan to close what HMRC calls the tax gap. Stay with me now. This next bit is where you see how all the different pieces of the puzzle fit together.
Just look at how all these different threats are coming together for 2026. First, HMRC is hiring 5,500 new compliance officers. And guess who their main targets are? Landlords and small businesses. Second, the government is creating a mandatory national landlord register. Now, for HMRC, this is a compliance goldmine. It's a complete list of every single landlord and every property, making it dead easy to find anyone who isn't declaring their rental income. And finally, there's a huge crackdown on tax avoidance schemes, especially those hybrid models that promise to slash your tax bill. If you're using one of those, you're pretty much putting a massive target on your own back.
Okay, so I know this all might sound a bit daunting. The risks are very real, and the stakes are high. But look, the point of this isn't to scare you, it's to prepare you. So now we're going to switch gears away from the problems and onto the solutions. Let's talk about your defense strategy.
This really is the question that matters most right now, isn't it? With HMRC's powers being stronger than ever before, how do you make sure you're protected? How do you protect your investment and, frankly, just get some peace of mind? Well, the answer is all about being proactive, not reactive. So here is tip number 1 from the experts at My Tax Accountant. Go digital, and go digital early. Do not wait until you're forced to do it in April 2026. Start using MTD-compliant accounting software right now. Get used to keeping digital records. Learn how it all works while the pressure is off. If you get ahead of it, you can turn what could be a crisis into just a manageable change. And tip number 2 is absolutely critical if you have even the slightest feeling there might be mistakes in your past tax returns. If you have any undeclared income, no matter how small you think it is, the single best thing you can do is come forward voluntarily. HMRC has a proper formal process for this called the Let Property campaign. It is, without a doubt, your safest way to get things straight. So why is this so important? Well, because coming to them first completely changes the situation. It means you get the best possible terms and, crucially, you face much lower penalties. If you wait for HMRC's digital detective to find you, the penalties can be absolutely brutal, sometimes up to 100% of the tax you owe. But if you disclose it yourself, they can be reduced hugely, sometimes even down to zero. The latest stats show the average recovery per landlord is over £13,000. Getting ahead of that and managing it on your own terms is a huge advantage. And all of this brings us to the main takeaway. The world for landlords in the UK has fundamentally and permanently changed. The way you might have done things 5 or 10 years ago, it just doesn't work anymore.
I really want you to hear this powerful summary because it just captures the new reality so perfectly. The era of the unseen landlord has effectively ended. It says that getting picked for an audit is no longer a matter of bad luck. For anyone whose digital footprint doesn't quite match up with their tax return, it is now a mathematical certainty. So the bottom line is this: keeping good records and getting professional, expert advice is no longer just a nice to have. It's not a luxury. In this new world of intense scrutiny, it is an absolutely essential part of protecting your property, your investment, and your future. Look, if anything we've talked about today has made you think or has raised some concerns, the best thing you can do is take action. The team of experts at My Tax Accountant are there to help you navigate all these changes. You can book a consultation by giving them a call on 0208 570 8531, or you can drop them an email at info@mytaxaccountant.co.uk. And for more updates like this one, I'd really recommend subscribing to their YouTube channel.
And finally, just the important disclaimer. The information we've gone through today is for general guidance only. Everyone's tax situation is different, so it is absolutely essential that you speak to a qualified professional advisor from My Tax Accountant about your specific circumstances before you make any decisions. Thank you so much for your time.